Welcome, everyone. Are you curious about the exciting world of futures trading? Or perhaps you're searching for ways to diversify your portfolio and boost your earnings potential? Either way, you've landed on the right video. My name is Yu, a professional trader with years of experience under my belt, and I've been navigating the tumultuous waves of the futures markets, particularly the E-mini S&P 500 futures, but also the Nasdaq, gold, crude oil, and some soybean as well. Just today, over a trading session of about 6 hours, I've managed to secure a substantial profit of over $15,300. Sounds impressive, right? This is not just a walkthrough, it is a deep dive into the critical concepts, the mindset, and the strategies that you need to thrive in the futures markets. We'll explore the intricacies of futures contracts, delve into key aspects of trading psychology, and discuss the practical tips for beginners looking to venture into day trading. Regardless of whether you're a seasoned trader looking for new strategies or a beginner trying to understand the ropes, this video is tailored to provide you with actionable insights and help you elevate your trading game. So, are you ready to embark on this enlightening journey with me? Let's trade better together. Don't forget to hit the like button, subscribe, and turn on the notification bell to stay updated on future trading adventures. Now let's dive right in. In the grand theater of financial markets, one instrument steals all the limelight with its potent mix of risk and rewards. This instrument is the futures contract. Beyond the glare of Wall Street, these seemingly arcane financial agreements ripple through our daily lives. They shape everything from the price of your morning orange juice or a cup of coffee to the cost of heating your home in the winter or cooling your home in the summer. Yet, the futures contract is more than just a conduit of price determination. It is a lifeline for businesses seeking stability amidst constant market turmoil, a crystal ball for investors peering into the future for stability and profits, and an accelerator for speculators hunting for profit, not unlike a professional hunter silently moving through a dense forest. The sportsman was intently tracking his prey. At its core, a futures contract is a straightforward concept. An agreement to buy or sell a particular commodity or financial instrument at a predetermined price on a future date. This simplicity, however, belies the powerful impact such contracts exert on global commerce and individuals' fortunes alike. The world of futures contracts may appear distant and complex, like a faraway galaxy in a remote corner of the universe. Like a nebula teeming with celestial bodies, each following its own mysterious path. However, with a firm grasp of their principles and mechanics, it becomes possible to chart a course through this financial cosmos. In this video, I will be your celestial guide, unraveling the complexities of futures contracts, exploring their diverse roles, warning you about potential pitfalls, and helping you, my audience, in demystifying their risks and helping you along your path to becoming a profitable trader. Ready your minds as we embark on an enlightening journey into the intricate universe of futures contracts. Fasten your seatbelts. The countdown has begun. We will be going faster than light, and we're ready for liftoff. Are you ready? Let's go. Briefly explain what futures trading is for the uninitiated. What is futures trading? And what are futures contracts? Futures contracts are financial agreements that obligate the buyer to purchase and the seller to sell an asset at a predetermined price and at a set date in the future. The assets involved can vary widely, ranging from commodities such as oil, wheat, gold, soybeans to financial instruments like government bonds, currencies, and so forth. Futures contracts are the crux of a world that pulses with financial speculation. What are these, you ask? Think of them as binding financial agreements, obligating a buyer to purchase and a seller to sell an asset at a fixed price at a fixed date in the future. Ever speculated on how the price of commodities such as oil, wheat, gold, soybeans, hogs, beef may fare in the future, tomorrow? Or perhaps in financial instruments like government bonds or currencies. That's exactly what these contracts are pegged to. So given this large range of assets, what particular commodity or financial instrument catches your eye in futures market, and why? Futures trading is the practice of buying and selling these futures contracts. Day traders use futures contracts as a way to speculate on future price of an asset involved. If the trader believes that the price of the asset will rise in the future, they might buy a future contract now at the current price with the hope of selling it later at a higher price for a profit. On the other hand, if they believe the price will fall, they might sell a futures contract in anticipation of buying it back at a lower price later on. Let's talk about trading futures. Moving on to futures trading. This is essentially a buy or sell practice of the futures contracts. Have you ever tried to speculate on the future price of an asset? Tell me about your experience. How did it go? Were you profitable? How long were you holding? Did you go long or short? These types of questions help me understand your experience in the markets. Purchasing, buying, or selling these contracts, that is exactly what futures trading is all about. If you, as a trader, has a hunch that the price of an asset will go up or maybe skyrocket, you might want to buy the contract at today's price or right now, anticipating that you can sell it off for a profit after the price goes up a little or substantially. Conversely, if you foresee a price tumble, you might want to sell a futures contract right now, hoping to buy it back at a reduced price later. Have you entered into a futures contract? Did you go long? Did you go short? How did it go? It is important to note that futures trading involves substantial risk because the futures market can be highly volatile and because futures contracts are typically leveraged, meaning that traders borrow money to make trades, and the cost that you pay to enter a trade is substantially less than the actual price of the assets. Traders can potentially incur significant losses. Therefore, futures traders is usually recommended only for sophisticated investors who fully understand the risks. Have you traded before? Did you fully understand the risks when you entered your position? Do you know any type of risks that could happen for trading futures? Again, let me know. What's your experience here? Remember though, all that glitters is not gold. Futures trading is peppered with risks, and the risks are substantial. The market for futures can be turbulent, creating a high volatility situation. Since futures contracts are generally leveraged, you pay a lot less to enter the position. The ability to make profits is very high, but also the ability to make losses are equally as high. The borrowed money is a double-edged sword. It facilitates your trade, allows profits, but we also have to keep in mind that we can lose money on the trades, and we should always be careful. This means when you enter the market, you should always have a stop loss, which is a maximum you're willing to risk for any particular trade. And again, things like stop losses and how to enter are reasons why the futures market is only recommended for sophisticated investors. Now, if you aren't sophisticated yet, it is my goal to help you to understand all the risks so that you can know how to safely enter the market, take profit as an active speculator, and become a profitable futures trader.